The inflation in Argentina is insane. It's like 100% a year. It's chilled out a little bit with the recent president, but nonetheless, it's still like a total disaster. Like if you think the U.S. inflation is bad, I mean, Argentina, the prices change every week, and so, okay, so why is that interesting? So, if you look at Argentina, so their currency is totally impossible to save in. You can't put a business treasury in the Argentinian peso. You can't have a savings account in the Argentinian peso and have any expectation that preserves its value even month to month.
Hey, freaks. That was Alex Leishman, CEO of River, painting a picture of what happens when a currency starts to fail. Alex has spent years thinking about how people use money and building tools to help them navigate between the world of Bitcoin and traditional finance. His company, River, is at the forefront of making Bitcoin accessible to everyday Americans while keeping their money safe. Today, we're diving into a fascinating idea from the TFTC podcast about how we might use money in the future. Alex shares his unique perspective on why we might end up using both Bitcoin and dollars for different purposes, and he uses real-world examples to explain why this makes sense. If you're wondering what the future of money might look like, this conversation is going to open your eyes to some possibilities you might not have considered. If you enjoy this breakdown, make sure to smash that like button and subscribe to catch more content like this. And if you want to hear the full conversation, you can find the link to the TFTC podcast episode in the description below. Let's talk about what the future of money might look like. Based on my experience running 1031 and watching how people use Bitcoin, Alex is about to share a perspective that might surprise you. He's going to explain why we might be heading toward a world where we use two different types of money, one for saving and one for spending.
We think that this is the future of banking, really. I genuinely believe that we're moving towards a transitionary period where we're going to live in this dual currency era where people save in Bitcoin but still spend and earn in dollars, which means people will still have some dollar or cash savings, but they'd much rather earn interest on that cash in a harder currency.
Yeah, I mean, this is, if you look at Tether, essentially what they've been doing is issuing their stable coin and then having liquid reserves predominantly held in U.S. treasuries, U.S. treasury notes, particularly short-term debt. And then that's what everybody has been basically lauding Tether for the last 2 years.
What Alex is describing here is pretty different from what you usually hear in Bitcoin circles. Many people think Bitcoin will completely replace the dollar, but Alex is suggesting something more nuanced. He's saying we're moving into a period where people might keep using dollars for everyday things like buying groceries or paying rent, but they'll save their wealth in Bitcoin. This makes a lot of sense when you think about it. People need predictable prices for daily life, but they also want their savings to hold their value over time. It's like having a checking account for spending and a better savings account for the future. This idea is already playing out in some parts of the world, and that's exactly what Alex is going to show us in the next clip. Now we're going to hear about a real-world example of what happens when a currency becomes really weak, but people still need to use it. This is important because it might show us what's coming in other parts of the world.
There's some interesting data points that have sort of influenced this opinion for me. One was spending time in Argentina. So I've spent a decent amount of time down there, and as I think a lot of people listening know, their currency is really, really bad, and it has been for a long time. The inflation in Argentina is insane. It's like 100% a year. It's chilled out a little bit with the recent president, but nonetheless, it's still like a total disaster. Like if you think the U.S. inflation is bad, I mean, Argentina, the prices change every week, and so okay, so why is that interesting? So if you look at Argentina, so their currency is totally impossible to save in. You can't put a business treasury in the Argentinian peso. You can't have a savings account in the Argentinian peso and have any expectation that preserves its value even month to month. However, everyone still transacts in Argentinian pesos.
This example from Argentina is eye-opening. Imagine going to the grocery store and seeing prices change every week, because that's what happens when inflation gets really bad. But here's the fascinating part. Even though the Argentine peso is losing value incredibly fast, people still use it every day. They have to. You can't walk into a store in Buenos Aires and buy bread with Bitcoin or dollars. This shows us something really important about how money works in the real world. Even when a currency is failing, it can still be useful for everyday transactions. Think about it like a hot potato. You don't want to hold it for long, but you still need it to get things done. Alex is about to explain why this pattern of behavior is so important for understanding how Bitcoin might fit into our future.
And so despite the currency being terrible, all the transactions, at least day-to-day commerce, is happening in pesos because it is so sticky. It has also the power of the state sort of pushing this, but just the protocol of society is so sticky that even when the currency is trash, people still use it to transact, and they just save in other things, and sort of swap into it when they need to spend it, and swap out when they earn it. And that influenced kind of my thinking a lot. And it's possible that analogy just won't map to what's happening in the US, but I just sort of have this hunch that even if inflation continues to really pick up in the US, people are still shopping at the grocery store with dollars.
What Alex means by sticky is that once a society starts using a certain type of money, it's really hard to change those habits. Think about how hard it would be to convince every store, every restaurant, and every service provider to switch to a new system all at once. This is why, even in Argentina, where the currency is terrible, people still use pesos. They might save in dollars or other assets, but they convert back to pesos when they need to buy something. This pattern could be really important for understanding Bitcoin's role in the future, not as something that replaces dollars completely, but as something that works alongside them. Now we're going to hear about how this applies to regular people, even those who believe strongly in Bitcoin.
But also, we also saw that people had a lot of dollar savings still. Yes, on Twitter it might seem like nobody touches dollars, but in reality, like the vast majority of people still have a dollar savings account and a cash buffer, especially if they have families. They have often up to a year of cash just in case, even if they're really big Bitcoin believers. And so we saw that, and we were like, you know what? We should help these people. We should build something that helps serve the need of, yes, I need this cash predictability in my life because that's the way the world still operates.
This is where the rubber meets the road. Alex is pointing out something I've seen personally through 1031. Even the biggest Bitcoin believers still keep some dollars around. They need it for rent, for unexpected expenses, for their day-to-day life. This isn't about not believing in Bitcoin. It's about being practical. Families especially need that predictability. They can't risk their grocery money or rent money on something that might go up or down 20% in a month. This is why the dual currency future makes so much sense. It lets people benefit from Bitcoin's long-term value while still having the stability they need for everyday life. All right, freaks, that wraps up our discussion about the future of money. Alex's perspective here is really valuable because it's grounded in real-world examples and practical experience. We often get caught up in thinking that change has to be all or nothing, but history shows us that transitions usually happen gradually, with old and new systems existing side by side for quite a while. If you found value in this breakdown, don't forget to like and subscribe. We've got more conversations like this coming up that you won't want to miss. For the full episode with Alex, check out the TFTC podcast link in the description. Until next time, stack sats and stay humble.